Hello and welcome to the first of a series of videos produced by the Illinois Chamber of Commerce that will talk about proposed changes to business taxation in 2021 that are being actively considered by the State House as we speak. These are far-reaching proposals, and it's really important to note that these are proposed tax treatment changes that have been thoroughly debated by the State House, that have been signed into law by the governor himself, but sometimes get referred to as loopholes. Nothing could be further from the truth. These are mainstream business taxation policies that are in place that make Illinois a little bit more competitive with other states. And if we change these things, it could really have an even more devastating impact on the Illinois economy. So let's go ahead and take a look at the first set of issues we're going to discuss today, and then we'll discuss a number of these other changes in subsequent videos. So the first we want to go ahead and talk about, and one that we're very concerned about, is a proposal by the administration to go ahead and cap the use of net operating loss. Again, this is something that all states allow, is that if you have a loss in a certain tax year, that you're allowed to go ahead and carry that forward to subsequent tax years, recognizing that you didn't have that income. So the proposal is to go ahead and cap the use of net operating losses at $100,000 a year. This is despite the fact that coming out of the COVID recession, we have businesses that have millions of dollars of losses, especially in the transportation and hospitality industries. This is devastating to go ahead and increase their tax burden. At the same time, they're trying to recover from the COVID recession and actually stay in business. So this net operating loss cap is a huge issue for businesses, especially transportation, hospitality, hardest hit by the COVID recession. Also, there is a proposal to go ahead and decouple from federal accelerated depreciation. This is a vestige of the 2017 tax reform from Washington, D.C. that was very beneficial to the business community. One of these issues that was included in that bill was the ability to immediately expense investment in certain assets immediately as opposed to depreciate them over time. We think that this is a huge issue for especially manufacturing and anybody that's making capital investments. So the administration says that this will go ahead and produce $212 million this fiscal year. Over the life of this program, though, the exact impact to the state is zero, because you'll be able to go ahead and use that depreciation over a period of time, but the real problem is the time value. If someone owes you $100 today, would you want to wait 7 years to go ahead and get that payment, or do you want it right now? So especially, again, coming out of COVID recession, you need that depreciation right now, and you need that assistance right now, and this just pushes off that tax treatment. The state nets zero over the life of it, but it's simply an interest-free loan from businesses to state government, and we think that's wrong and short-sighted. Finally, we want to go ahead and also talk about mark-to-market financial assets. There are two pieces of legislation, House Bill 3475, Senate Bill 2121. This issue is getting a lot of discussion out in Washington, D.C. and the Biden administration as well. What it means is that if you have financial assets and the value of those assets go up, then your taxes go up even though you haven't realized the gain, meaning you haven't sold those assets. Right now, you pay taxes when you sell those assets, and you pay taxes on the gain. What this mark-to-market means is that you pay taxes even though you haven't realized those gains. So we know the taxes go up under mark-to-market. What we don't know is if the value of those assets go down, will your taxes go down as well? We strongly suspect that taxes go up, yes. Very, very uncertain whether if the value of your assets go down, that your taxes go down as well. So let's go ahead and finish with something that's actually good news, which is a piece of legislation that the Illinois Chamber is a chamber initiative, Senate Bill 2531. And it is a workaround on the federal cap on state and local tax deduction on your federal tax return. As part of the 2017 tax reform in Washington, there's a cap at $10,000 on the amount you can deduct from your federal taxes that related to state and local taxation. So this is something that really, really disadvantages members of partnerships and entrepreneurs who are paying those higher taxes, yet they're getting dinged at the federal level. So Senate Bill 2531, Chamber Initiative, is getting great bipartisan support. It passed the Senate 56-0. Representative DeLuca is carrying the legislation for us in the House. We fully anticipate that this piece of legislation will make it to the governor's desk and that he will sign it. So this is good news for partnerships and entrepreneurs. We wish it could be broader, but the IRS has certain restrictions on what states can go ahead and do. So we're helping out members of partnerships and entrepreneurs through this piece of legislation. And I think it's going to be one of the rare tax wins for the business community this session. So we look forward to talking to you again very soon on a number of other very, very important tax treatments that are under consideration at the State House. Thank you.